All right, guys, welcome back to the channel. Over the last 30 days, I've shown you this particular signal that has shown up 4 times and resulted in the outcome that we're anticipating. It has happened again, resulting now in a new all-time high daily close. Plus, we're seeing more bullish signs across the market yet again within this winner's curse phase of the cycle. Now, I've got heaps to get through in today's video with you, plus some lessons where I was wrong, and hopefully you can make money from them in this particular cycle. So make sure you hit that like button if you find value from the content, and of course subscribe. It is your home of macro cycle analysis. Each of the day's videos builds upon the previous day's analysis, and I don't want you to miss out on any of that analysis. We'll be covering Bitcoin, cryptos, the stock markets, and the real estate cycle. It is a big video today, jam-packed, filled with data and information, and of course charts. So if you're looking for any of the references that I'm talking about, you'll find them in the video description. Of course, the channel sponsors Bluffin, Bybit, CoinCatch, and for the Aussie SwiftX to trade your Bitcoin and your cryptocurrencies. Okay, let's kick it off with the agenda. 12th of December, Bitcoin volatility, but this is the big one. Vital signs lacking. However, there has been the beginnings of some max pain. We've got some CPI, the stock markets, the real estate cycle, getting into the cryptos. So let's not waste any more time and discuss what the market is turning into. This one's from Charlie Munger, and we've got a little bit of SEX advice from Mr. Warren Buffett. Bull markets go to people's heads. If you're a duck on a pond and it's rising due to a downpour, you start going up in the world. But you think it's you, not the pond. That's pretty much a fantastic analogy of what we see in bull markets. It all starts to go to people's heads because they're making money in the market. However, there usually is something to get us out of that mindset, and we don't want to be on the wrong side of it when something changes in the market. So we're looking at this sort of max pain bull market stuff. Now it's on to some sex advice with Warren Buffett. A bull market is like sex. It feels best just before it ends. I don't know if we're at that stage yet. I don't think this is the best feeling we're going to have in this particular bull market. There's probably a lot more to go in this stage, but if you start feeling like that, and usually the way this looks in a bull market is you are screenshotting your portfolio, you're looking at your gains, you're bragging about your portfolio to your friends, coworkers, family. That is usually the best feeling that you get in this market. If you haven't seen it already in March 24, or even just recently when Bitcoin hit 100K, it's pretty much the feeling you're looking for. However, this might be the quote here, markets can remain irrational longer than you can remain solvent. So sex actually might go for longer than 30 seconds this time. So you could see that how long these markets can go up in a particular direction, and it can last much longer than many of us expect it to. So if you find yourself thinking that, oh, this is the end because it's too euphoric, just remember, maybe you're used to 30 seconds, but the market can remain irrational longer than you can remain solvent. And on top of that, bull markets are born on pessimism, grow on skepticism. So we're kind of still in that skepticism phase. People keep talking about, oh, we're going to see a dump to 74, or, fill in some sort of CME gap down at 70s or whatever it is. Mature on optimism. So we still have that optimism to go, in my opinion, and then they die on euphoria. Euphoria is the peak here that Warren Buffett's talking about. This is the Wall Street cheat sheet. Maybe it's the first time you've seen it. Maybe you've seen it a gazillion times. I've been talking about this for years now. This particular post here was on the 2nd of June. 2nd of June saw Bitcoin somewhere around this low here at 25K. And I was making the reference that Bitcoin was likely in this disbelief phase coming out of the lows. And at the time, this was pretty much where people thought we were seeing a bear market rally that would lead to further downside. People were looking for 12K, 10K, 9K. So just to put it into perspective with where we're currently at, that disbelief phase was back there, and we are well and truly into the bull market phase. So we're somewhere into this optimism leading up into the peak. So as Sir John Templeton says, they grow on skepticism and mature on optimism. So that's why I think we're sort of into this phase here. We've had the skepticism between March and before the breakout. This to me looks like skepticism. And now we're sort of leading into that optimism. And then we'll get into euphoria, where basically this bull market will go to die. It sounds quite dire, doesn't it? But there's still more gains to be had to the upside. It's really just about remembering what these legends have all told us. Don't let this shit go to your head because, well, you'll end up with nothing. So with all that wisdom in the background there, I thought I would put together a little post here looking at Bitcoin and the bull market. So we've got max pain events. I think the max pain is going to come to the upside. And I'll show you reasons why when I get to the data. The whole point of what we do with investing and trading is to use the data to our best of our abilities, obviously charting as well. But at the end of the day, all we're really charting is human emotion and how people react to what they see in the market. They saw a down day yesterday, they reacted, they sold, and now the market's basically pushed straight up. So what do I think is going to happen longer term over the coming weeks, if not months? Bull market max pain is usually up with shallow pullbacks. They keep hoping for these big second chances at some sort of entry that they missed out on months ago because most people do not stick around in the markets. They gamble on it, they hope, they wait for a few days, a few weeks, maybe a few months, and then they leave. They think they're going to make money quick. Just enough of a pullback to get by the dip hopefuls, believing that they'll get a second chance, only to see it ripped away from them. They then buy at a higher price than when they first thought about buying. So what does that look like on a chart? Well, they're probably up here looking for this big pullback somewhere into the 80s or the 70s where there was some sort of CME gap. It doesn't happen, and then the market pushes higher, and they keep waiting for this sort of move. When is this pullback going to happen? When's it going to happen? Maybe they buy and then it pulls back, but that's just part of the game. That's why you need your strategy set up. And if you know that there can be those pullbacks, but you know where the invalidation levels are, well, then that helps you sleep easier at night. So what I'm looking at here are the signals that we've seen. This is where I put the video out as well back in October, looking at the 2 pump, 4 grind, 2 pump. Of course, it's strange that it's very similar again, and I have not expected it to be this similar, but here we are. There's a pump week, 10%. There's another pump week, 15%, and then the grind, 1, 2, 3, 4. We've got another pump and another pump, then into a grind. We see a pump, and then 1, 2, 3. Maybe we finish this 4th week as another grinding week. Then, if we're lucky, we get to have a couple of pumps into another fresh top. If that's the case, the timing then puts us through to, that would be next week, the 16th, then the 23rd. So that's the week of Christmas. And then we get into the last week of December and then into January. So there is a little bit of headwind there where the volume typically drops off. So that's what I'm talking about here with sort of the vital signs. There's potentially a lack of interest coming towards Christmas or just after. We often see that in the markets. You can go back to December last year. You can see the grind was around December, and then you had more interest coming back in the 1st and 2nd week of January. Doesn't mean it leads to a massive move to the upside, but you can see the peak. Yes, it was a ETF announcement and launch, and then the decline there as well. So just keep watching for any sort of peak that might come up because we're still in an uptrend, which could eventually lead to a correction. But I'm saying not a major one that basically takes you all the way back to 74, because going back to this, I think the max pain is to the upside, and the masses are still hoping for bigger pullbacks to get into the game, but I don't know if the market is that willing to give us any of those major opportunities, considering we've had 8 months of a grind and now we're starting to break out. Typically, when you see long accumulations, long consolidations, you had one back here, you had 2022 and 2023, it's unlikely that you're going to see the market go back into that area. If it did go back into that price range, that is a weak signal. That's part of Wyckoff analysis. You don't want to see the market go back into this zone because that's telling you that the current buyers who bought up into this, the pump, now don't see value in it anymore, and they think it needs more time to consolidate. So that would be a weak signal if it came back under 74K. Next up is the economic news, CPI, and some of the stock markets that we're seeing hit new all-time highs. Now, this one here was something that I was going to talk about in a separate video, but stuff it. Let's throw it all into one video. We've got the CPI. CPI was up a little bit here. that potentially means inflation is coming back. And maybe I'd change the title on the video, but the thing I'm looking at here is a lot of these signals that are showing up and what's going on in the economy will lead to higher prices. The bears, the pro traders, verified investors, they keep thinking that this is all bearish news and the market needs to collapse now. Totally wrong, and they have been wrong for years. So one day they'll be right like a broken clock, but this is all news for the markets to keep heading up for now. And on top of that, which eventually I believe the market's going to collapse, and that's where I come back to the 18.6 year cycle. We still have further upside to go here before all of these problems that are building in the background come to fruition, but you'll have to see it on the chart first. That's when you see this collapse, and it's not showing on the chart yet. On top of this, you're getting inflation, and now you've even got the market expecting another interest rate cut. It doesn't make sense, but I'm not trying to trade against it. They still want interest rate cuts, which is going to lead to further inflation, and it's going to lead to further prices going up even further. So let's have a look at that on the chart. Gold, after that news, has gone up. Generally, longer term basis, you'd expect gold to go up because, well, for this sort of news, because people are anticipating, or investors are anticipating, further inflation. So how do you protect your money? How do you protect your assets? Well, you got to put it into something like potentially Bitcoin. Of course, gold's still a massive asset class out there, $18 trillion. Bitcoin's at $1.5, $2 trillion. And you're going to see these asset prices continue to go up in the face of inflation potentially rising, as we're seeing a little tiny bit here, 2.7 now year over year. And then if you cut the interest rates, you've already got a flipping load of money out in the system. The point of the higher interest rates is to collect that in terms of interest or taxes so that it takes more of that money out of the system. So you cut the interest rates, you keep flooding the system with more and more money. Where does the money go? Well, if they think there's going to be inflation, it goes into assets. So there it is. There's gold. It's higher. Here is oil on the daily here, pushed higher. Now, oil really hasn't done anything for a couple of years. It's basically been range trading and getting lower highs with a flat bottom here. There's still no confirmation whether it drops or it goes higher. However, first signs could be a break of $72, which is the first 50% here. And then we have another 50% up at $88 using that top to here. So that one would be $77. And then you've got another move here at above 80. So if you start to see a lot of these commodities continue higher, you've got oil, you've got gold, there could be copper as well, which is showing higher prices. That is all good news for Bitcoin also going higher. Stocks are going to keep going higher, and shit is going to keep getting more and more expensive because, as you know, well, maybe you don't know, but the majority of our stuff, our computers, technology, our houses, our cars have copper. Copper is also heading up. You've got higher lows forming here, and it is trading around all-time high numbers, breaking past that 50% level. So it is something great if you're in assets like BTC, but if you're not, this could be quite painful. Now, I also said stock markets were heading higher. The S&P had a day up, so we never saw the 3-day down rule from the top, and that 3-day down signal generally shows further downside. However, this doesn't mean that that's the low. You just may not expect as big of a correction as, say, August. So at the moment, you've got the level in here. It's come back, met the price ranges. It's met the volume back here, which is another sign of somewhat strength, and now attempting to close the week out above 6,000 points. The NASDAQ, however, did shoot to a new all-time high price, a new all-time high daily close. And of course, if the week closes out there, well, then you've got another new all-time high week for the NASDAQ. And that is off the back of Tesla hitting a new all-time high. There it is right there. And this is part of what I want to talk about in terms of I was wrong, but how you can still make money using trading rules and trading signals to get you back into the market in case you're missing out on the moves. So Tesla, $424 new all-time high. I'll come back to that. But the major news is the NASDAQ hitting a new all-time high. Now, there is a lot of data I can get through here with the bull markets, how long and strong they are, but you're seeing some early cracks. I'm going to leave this to future videos and dive straight into crypto and Bitcoin. Now, here are some of the indicators, some of the signals here that are dying off as the price is heading higher. Let's reset this for today. We're at 74 yesterday. Today we hit 83, so back at extreme greed. It's still tracking along in terms of what we've discussed with the extreme greed and greed being at higher readings for a considerable amount of time. Now we've looked at roughly 1 month before you get a correction, or roughly 2 to 4 months, maybe broken up with one correction in there. The same sort of thing is happening at the moment. You can see we're back at 83. We did get to the 90s and drop back into the 70s and 80s. So it's still a healthy level there of greed, or extreme greed, and things can get a little bit crazier, but it's good to see it at least dropping back into the greed every so often. Ideally, you'd see bigger corrections along the way with higher prices as well. The Google trend words, so looking at Bitcoin and crypto, again, the interest hasn't come back yet from retail. You can see a little bit of a turning point here. We are on the 90 days, and this is just looking at it day by day. 11th was at 42, now we're at 45 because Bitcoin's hit a new all-time high daily close, but not new all-time high price. So the media is looking for something else to talk about, and also crypto has turned up. This isn't necessarily a bad thing for Bitcoin and crypto either, where you don't see the interest in the search volume at the peaks that it was, because, well, for one, there can be more room for it to grow. And two, well, it's not a bad thing, because if there is more room for it to grow, well, then you can have those lower prices before the craziness kicks off again. In terms of the craziness, the liquidations are down. And in 24 hours, we've only seen a roughly $230 million of liquidations, basically coming back into balance from what we've seen over the last couple of months. And those last couple of days where we had $1 billion of liquidations and $1.5 billion. So the liquidations seem to be in a sort of an average area for this stage of the market as well. So basically I'm getting the data pieces together, just having a look at what we review every day to see whether the interest is still there, or enough interest to keep the price somewhat stable, or at least in a healthy trading range. Any corrections are fine. But we don't want to see it drop off too far. And the exchange volume is another one that we continue to track. If we started to see it drop below the 90 billions, well, we might have to anticipate that there could be a slower period for Bitcoin and cryptos, not as much trading going on. With this trading volume above these previous tops, it's sort of that 60, above 70, and then also trading above that 80 and 90. So call it between 60 and 90. You've got, call it enough degens in the market to keep the volume running around and prices going to new fresh highs, as we'll see in just a moment. As for Bitcoin, this is our Bitcoin curve for the month. So, well, for the entire year, but we're looking at December here. This is predictive cycles that you can get with TIA Indicator Suite. As I said, it's links in the video description. Go check that out right there. And the point of this is to help us with a roadmap for the month. Now, the all years, this is green at the top, shows for December. If I take it off log, you can see a few down periods. This is all the years, mind you. So this is bear and bullish years. December's had a pullback, and then it finishes the month strong. Maybe not at the same price that it opens, but it's finishing the month strong. The low in terms of the date, 17th, into the high low, roughly the 21st. Bitcoin's lows in December are the 5th, and almost an even low there on the 9th and the 10th. So there could be another low just according to the overall cycles. But with this particular trend, it seems unlikely at this stage, especially with those higher closes. And if it's able to continue to close above 101, which you can see are the tops here, that's going to give you that extra level of confirmation that the consolidation wants to happen at higher prices after testing the lows and putting in higher lows. You got that slightly increased volume as well on that push up. So all stronger signals here. So the main reason I wanted to show this again is that we saw a few of these moves down, but that can also end the month strong, well, what we can see from Bitcoin. And so far it seems to be doing something similar to that. So when we compare the all and the actual, you can see November, pretty good month up. December has been so far for the first 12 days indecisive. You can chuck on all again. You can see that November up, and so far December pretty indecisive. Now, this was one I shared with you yesterday, and the point of this was to show that we've got further upside to go, but there can still be those corrections. I don't think, again, nothing to be too concerned about, just some nice longer term signals that continue to play out. We had the breakout on strong volume, good signs for Bitcoin and cryptocurrencies. And the USDT dominance has failed for now at 4.2. Look at the first two tests there, right there and right there. And then we had that failure here with Bitcoin going higher, ETH going higher, Solana going higher, XRP going higher, and SUI hitting a new all-time high. So this is that important chart that we were watching yesterday for a possible change in direction if there was a close above 4.2%. Did we get the close? Luckily not, at least luckily for the bulls, and we've seen a rejection at the moment. Now, the game is 3.8%. Needs to go under there and close under there. You can see it's only tested 3.8%, but there's never been a close under 3.8% for this cycle. So I think that's going to be the key level there. Should we continue to see further pumps to the upside, that sort of max pain event for Bitcoin and cryptocurrencies, USDT, to come back down here. Ethereum also found its low and has pushed a little higher. Nice daily close above the 50% level of 3,735. However, the volume is a little weak on that move, and it's still not able to get over the $4,000 level with a close, which was obviously the previous top there as well. So could be a little more time here for ETH before it can get back above those levels. And of course, Bitcoin is stealing the show. Now, the total cryptocurrency market cap, similar sort of day there as ETH. The move down, move back up, and still waiting on those closes above the $1 trillion level, which was the previous highs. So Bitcoin's closer to its tops than the total, or the true altcoin market cap. To the downside, 700 billion still is the support level. That's your 50%. And apart from that, it's basically just hanging out until it decides what it wants to do next. I reckon we got a good segue in there for the channel sponsors, Bluffin, Bybit, and of course SwiftX as well. Get on board with your exchanges, set them up before things go crazy. But of course, stay safe out there in the markets with your wallets. Now, Solana also had a day up. It's been going down longer than the other two, so don't expect greater things yet until it gets above roughly these tops. Those tops are around 247, call it a round number of 250. And if we chuck a 50% level on there, you've got 234 at play and those tops. So a bit of work to do for Solana to get back above those levels and then test the old all-time high again. But that's a perfect segue. SUI has hit a pretty solid all-time high daily close yesterday with reasonable volume. It's above average, so it's another good sign. You got higher lows forming, and today has already basically taken off into a new all-time high, $4.74. Now, just for the sake of some percentages here, from the low in August, so 4 months ago. Now, if you're unaware, a 900% return is a 10x. Now, I could get into XRP and all that sort of shit, but maybe I'll leave that for another day and move on to Tesla, and where I was wrong on Tesla, but how you can still make money from this. So back in April of 2024, basically around the peak of Bitcoin, you had March and then into April, Tesla went below 50% and then pushed lower. So if you want to learn how to use these tools, as I said, the resources are in the video description to get into this in greater detail, but to give you a bit of a flavor for this and how you can change your analysis to get on board with the trend, you can see the failure here at 50% of the extension, and it was under 50% of 207. So this is how you're able to see the weakness and then the strength form in the market, and then have signals to get back in with the trend. So this was a day here breaking under that 50%. The following day, on the 22nd, closed back above it. So you had your first failure. However, it wasn't above the 50% level or that swing top. So there it is. There's your swing top there where you would put your stops. It took another few days before it was able to break higher and then take out the next level at 264, a pull back under 50%, but the higher swing low here formed, and then you had a breakout above 229. So a nice entry, a safer type of entry, would be above the $230 swing top. You continue to ride that through with your swing chart. So this is your Gann Swing Pro, and you just watch the levels continue to rise, and then you can keep changing, moving your stop loss up higher with the market. Some people like to use percentages. They go a certain percentage away from the market, maybe 20% from the market. But I think a strategy that I prefer is to continue to use the swing lows as an area for a change in trend, because often when that happens after a pretty strong trend direction, you will eventually see the market roll over from that point. These are very, very strong signals where the market has found strength. The buying has happened at those swing lows. So if it breaks under those levels, that's telling you that things have reversed, and nothing has reversed since, well, basically that low of the 22nd. You've got relatively even lows here, higher low, higher low, higher low, higher low, higher low. So if you've got entry signals to get in, you can basically keep following the market all the way up and make a pretty significant amount from that trade alone into new all-time high territories, which we know are the best places to continue on with your campaign in the market. New all-time highs, and Tesla is a fantastic example of that. Thanks again. Like, subscribe. Links are in the video description. We got through all of the great stuff. Pepe XRP another day. That's how I was wrong, but how you can still make money on the trade by following the trend using the Gann Swing indicator. All right, guys, take care. Until the next video. Peace out.